Welcome to StockHastix Weekly Market Overview covering January 15th. U.S. stocks for a time edged tentatively higher today in extraordinarily volatile trading, even after the Federal Reserve followed through on a pledge to buy corporate bonds under an emergency lending program, fully $1.1 trillion to fund the U.S. economy that has been pummeled by the pandemic. There was further good news. The nation's biggest bank, JP Morgan, posted its highest ever quarterly profit. The initial reaction seemed to be that the Fed still has the markets back. After a fierce rally sent global equities close to their pre-pandemic levels, sentiments in markets turned sharply negative. Economic data across the board shows that the global economy is still weak and a sharp correction is feared. That U.S. retail sales fell 0.7% in December was particularly painful, given that consumers continued holding back on retail spending augurs for the future, especially when a surge of coronavirus infections across the world, including China, induced troubling doubts among investors. In Asia, markets recorded steep declines. Gold prices slumped, with prices approaching $1,700 an ounce in London. To say it was a seesaw session is a bit of an understatement. Oil futures rebounded after dropping to less than $35 a barrel in fears that the pandemic will hurt long-term energy demand, especially due to the strengthening dollar. The Dow covered more than 1,000 points between its low and high points but rallied to close up 0.6%. The S&P 500 closed up 0.8% after swinging from a loss of as much as 2.5% to a gain of as much as 1.3%. The only bright spot was in tech-heavy sectors. The Nasdaq Composite Index rose 1.4% to 9,726, the largest rise in more than a week. Subscribe to us for all updates.